Do you want to know what happened in the market through February? I'll break it all down next on Tom's Take. You're definitely going to want to watch this one. So we know the number one question that comes up in real estate is how's the market? I've said this a million times on the show. Well, maybe not a million, but enough that you know it's very common. So what I want to do here is break down everything that happened through the month of February and tell you what that means for people that are looking to buy and sell homes in the next 12, 24 months. So the number of sales that closed year over year, so from this time last February up until now, is up 11.2 to 26.4% year to date, right? So that's a big increase in the number of closed sales that we're seeing through February compared to 2020. The number of sales pending, this is a little different. So closed sales or settlements. The number of sales pending in the month of February are down. Sales are down in terms of pending, which means contracts signed during that time period, 2.3 to 20%. The 2.3 is a little bit of an outlier. That's in the city of Philadelphia. The range in the suburban collar counties, Chester, Montgomery, and Delaware, is 16.4 to 20% in terms of a decrease. So less homes are starting to sell. Prices are up 4.8 to 10.1%. So we're still seeing prices rise pretty substantially year over year. Days on market is ranging from 28 to 34, so about a month. And in Philadelphia, it's 44. So that 28 to 34 range is, again, Chester, Delaware, Montgomery counties. And that is down from last year where there was a range of 53 to 59 days on the market. So it's gone from about 2 months down to about 1 month. And in Philly, it's a month and a half. Percentage of the asking price received. In the suburban counties, again, Chester, Montgomery, Delaware, it's between 98 and 99.9%. Literally the asking price. You're getting within 2% of your asking price if you're in the suburbs when you're priced right at the time the home goes under contract. And in Philadelphia, it's 95.6. And obviously there's some different market conditions in cities versus suburbs right now. And mortgage rates. This is a big change here. Rates are coming in on a 30-year fix, both a conforming loan amount in that low 500 or less range or a jumbo loan amount, which is higher than that 510 range, 3.25 to 3.5%. So we're seeing rates have creeped up. Still historically low, just not as low as they were a few months ago. And lastly, inventory levels, the big talking point. Everyone's going over this. Inventory in the suburban counties is between a 0.87 month supply, so less than a month, to a 1.01 month supply. And that's a range of 27 to 31 days of inventory, Chester, Delaware, Montgomery counties. And in Philadelphia, it's a 1.94 month supply, which is a 58 days supply. So we're seeing that inventory still remains very low. So what does all this mean? Well, here's the one thing for buyers you got to be mindful of. You may have passed on a house, you weren't ready to bid on it when it came up. Now your payment just got a lot more expensive. Your payment is going up. And because of the trajectory of pricing, it is critical. If you see a home you want, the market's probably not going to change that much this year or next year because of the influx of millennial home buyers into the market. So seeing that rates are going up, if you see a home that hits 70% of your target, if you see a home that's going to work for you, be ready to waive contingencies, go to your maximum price, and try to get the property. It is critical you do that because the millennial demand that's coming to the market is not changing. Remember, there's over 70 million millennials, 78 million in the entire country, and about 3/4 of them want to buy a home between now and the end of next year. So this demand is going to keep coming. So if you're a buyer, you find a home that makes sense, move on it because rates may continue to go up. The market got beat up a little bit the past week or two. That's going to continue. The value is, these are still historically low. People were buying homes in the 1980s and 90s for like 16%, 10% mortgage rates. So now we're coming in 3.25 to 3.5, still lower than they were a few years ago. For sellers, what I'm seeing here is that when inventory is at this 1 month supply or less than a month supply, or if you're in Philadelphia, it's a 2 month supply. When there's even leverage in a market, a 6 month supply is what economists identify where buyers and sellers have even footing in negotiations. We are at a third of that or a sixth of that, depending on where you are, whether it's suburban, which is at that sixth number, and the city of Philadelphia, which is at a third. So you're in a great position to leverage market conditions to get a great price. And 20% of the time, we're seeing buyers waive contingencies, meaning inspections and sometimes even the mortgage contingency when they need a mortgage. So there's a lot of value here in getting your home on the market now so you can cash out. So if you're thinking about selling, here's what I know. There will be more inventory coming to the market in the spring. This happens every year, except last year because of the pandemic. Remember, we were shut down. So do not hesitate and wait too long to get your home on the market if that possibility exists. And if you're buying and you see the right home, get it now before there's more buyers that come to the market. Lock in and find something where you can get settled because these market conditions aren't going to change anytime soon. Prices are going up, so it's still going to cost you more, and now the rates are higher. If you need anything, you have any questions, or you want to talk about your situation specifically, get in touch with a local agent. Feel free to reach out with us and get some advice so you can navigate this market. We'll catch you next week. Thanks for watching. You're definitely going to want to watch this one.